So when it comes to buying a house, one of the questions that I most often get is, what are the actual costs associated with buying a house? And in this quick video, I'm gonna answer that question, plus give you some additional tips that'll help you in your home buying process. Let's dive in.
Have the radio. Oh, short 'em down, cool 'em down, what's the
So what are the costs associated with buying a house? Let's start with what costs will be due up front in the beginning of the process when you're actually in escrow, the seller's accepted your offer, it's go time. Now, what money are you gonna have to come up with basically? All right, so let's start with the earnest money deposit, which is typically around 1% of the sales price. Can be more, can be less, but typically that's what we see is 1%. This is your skin in the game. The seller's taking their property off of the market and selling it to you. Next upfront fee that you're gonna have to come up with is typically the appraisal fee. The lender is going to order an appraisal, assuming you're getting a home loan, most people are, and that is a fee the appraiser requires that they get paid upfront. Typically that fee is about $500 up to $800 depending on the size of the property. Other additional fees that you may have upfront are home inspection fees. These are due diligence things that you as a buyer probably should be doing. They're not always required. Sometimes they're not required at all by the lender, but again, this is about making a smart home buying decision. So if there are skeletons buried in the closet that you should know about the property, the way that you're gonna find out about it, home inspections, pest inspections, pool inspections, HVAC, roof, all sorts of different things. So depending on the property is going to dictate what kind of inspection you need. And those can range all various costs, as low as like maybe $300 and upwards of $1,000 or so, depending on the trade and the scope of the project. All right, so let's shift gears and talk about basically you're at the end of your transaction. Let's talk about the additional funds that you'll need to close your deal. Hey, before I dive into that, do me a huge favor, smash that like button, make sure to subscribe, and put your comments below. I'd love to answer your questions. All right, so let's talk about closing costs. These are typically gonna be 2 to maybe 3% of the sales price of the home, and these are for things like title, escrow, attorney fees, notary, property taxes, homeowner's insurance, lender fees, all the various costs associated with your transaction. And then depending on what type of loan you're doing, you're gonna have a down payment. Now, some loans don't require a down payment, like VA, USDA, or like loans with a down payment assistance. The most typical kind of loans, which are conventional loans, usually what we see most often is a 5% down payment. The minimal down is 3%. All right, so now that you've got the keys, there are some additional things that you have to factor into the cost of owning the house. Now, some states have what's called a supplemental tax bill. And this is basically you, when you buy the house, you're paying the current owner's property tax basis, and you're waiting until the county tax assessor updates your property taxes based off of how much you paid. Well, until that time, you're kind of just creating this deficit. Well, guess what? The man's not gonna let you off. You're gonna have to pay him his money, and the tax collector is gonna send you a bill, a supplemental tax bill. This is very common in California and other states, and it's a nasty surprise, especially if you are buying from like a original owner and they bought their house 40 years ago and they're barely paying anything in taxes, and then you just paid today's prices and you're paying a lot in taxes. There should be an estimator on the county website. You should be able to get those answers so that you can factor that in and know how much you're gonna have to come up with. Something else I think a lot of people overlook is the utilities. They don't ask the seller. They don't try to find out basically like, hey, how much is power gonna cost? Gas, electric, sewage, water, all of those things. What is the cost to operate the property? It goes beyond just what your mortgage payment is, right? You're gonna have to keep the lights on. You're gonna have to keep the heater going during the winter. What does it cost on average to do those things? Now, of course, you're gonna have your annual taxes, your homeowner's insurance, and maybe even HOA dues if you're in an association. But the other thing that a lot of people don't factor into their cost of owning a house are repairs and maintenance. And although the age and condition of a house can really dictate what these true costs are, I would say that playing it safe, you need to be factoring in about 1 to 3% of your sales price as an annual expense to maintain the property. I mean, shoot, you're gonna spend a couple $100 just replacing your HVAC filters. So you gotta factor all of these things in, because at the end of the day, buying a house is a big financial commitment. And although it's very rewarding and has a lot of benefits to it, there are costs that you're gonna have to come up with. It's very important that you do your due diligence, you figure out basically what is it gonna cost for me to actually be in this property, and make sure that it fits within your budgets and your goals. If you'd like to talk to me and my team about your home loan, we'd love to help you. You can click the link below and schedule a time to have a free consultation with us. And do me a favor, if you haven't already, make sure to hit the like button, subscribe to the channel, and I'll see you on the next video.
There wasn't, it would happen.